Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy and specifically to talk about the problems that Russian companies and individuals are now having with debt. If you've been following the channel, you'll know that over the past 17 months, the Russian central bank has increased interest rates on 8 separate occasions from 7.5% to the current level of 21%. Now, the reason why they've done that is to try to combat what's happening with inflation. Inflation has been rising over the past 12 months, and this is becoming an increasingly large concern from Russia's point of view because prices are starting to get out of control and we're seeing a wage spiral. Companies are having to offer higher and higher wages because the Kremlin is sponsoring lots of different companies to help with the war effort in Ukraine. That's driving up wages across the board. People therefore have more money in their pockets, they're spending more in the stores, and that means that prices are going up. And at the same time as that's happening, the value of the ruble has been falling, and that's been driving up the price of imports. So to try to tackle that problem, the Russian central bank has been hiking interest rates. But the problem when you increase interest rates is that it means that anybody that has debt that's on a floating basis, so not a fixed rate loan, sees an increase in the cost of their borrowing. And that obviously puts more pressure onto those people and companies because more and more of their free cash is being taken up paying interest rather than being able to reinvest it into either their business or buy things in the economy. This chart, published by the Bank of Russia, shows the total volume of debt provided to individuals and companies in Russia between February 2022 and October 2024. So we start off by looking at the situation in February 2022. You can see that the total volume of loans provided to financial institutions at that time was 7.2 trillion rubles, and debt provided to non-financial institutions was 34.9 trillion rubles. So that means that in February 2022, the total volume of debt held by individuals and companies in Russia was 43.2 trillion rubles. Now, if you look at what's happened over the course of the last 2.5 years, you can see that there's been a rapid and consistent increase in the volume of debt provided to Russian entrepreneurs and companies. And the figures for October 24 show that the total volume of debt to financial institutions is now sitting at 13 trillion rubles, and the volume of debt to non-financial institutions has increased to 61.7 trillion rubles, which means that over the past 2.5 years there's been an increase of 31.5 trillion rubles, or 73%, in the total volume of debt outstanding. So what this official data shows us is that debt is rising in the Russian economy. Russian companies are having to take on more debt because they're short of cash. One of the reasons why a company takes on debt is because it doesn't have sufficient cash flow to be able to either pay all of its costs or make investments or do all of the things that it needs to do. Now, just before we go on any further today, I want to talk to you about today's sponsor, NordVPN, who I use on a daily basis and who are offering Joe Blogs viewers an exclusive deal. Unfortunately, cybercrime is becoming a daily occurrence. We're hearing about it more and more, and in fact, if you follow the channel, you'll know that this channel itself was hacked by cybercriminals. And if you want to avoid the same thing happening to you and your finances, you need to start using NordVPN. By using NordVPN, every time you log on, you'll be protected from all sorts of criminal activity. And don't override it like I did and expose yourself to a hacking incident. I spend a lot of my time researching articles to put together my videos. And unfortunately, I find that sometimes I'm geo-blocked from those articles. I'm not in the right country. However, when using NordVPN, you'll be able to access information, data, news articles, TV shows, movies, and sports matches that are not available in your region. And the great news is that Joe Blogs viewers are being offered an exclusive deal, which you can access by clicking in the link below. And the great news is that it offers a 30-day money-back guarantee. So if you're not happy, you can get your money back within the first 30 days. As I said at the start of today's video, one of the problems with increasing interest rates is that it increases the debt costs for any companies or entrepreneurs in Russia that have outstanding debt. Now, obviously, the caveat to that is that if all of those companies have fixed rate loans, then they're immune to any changes in interest rates. However, as we've just seen, there's been a huge increase in the total volume of borrowing in Russia over the past 2.5 years. So that means that lots of new loans have been taken out. And obviously, if you're taking out a new loan, it doesn't matter whether you're taking a fixed rate or a floating rate. If rates are going up, you're going to have to pay more, because as rates rise, so do fixed rates. So even though you might have a fixed rate for the whole length of your loan, if you're taking it out today in Russia, that fixed rate is likely to cost you at least 25%, because the official rate of interest now is 21%. So let's take a look at the split between fixed rates and floating rates on Russian debt. This chart, which has also been provided by the Bank of Russia and is over the same period as we've just looked at, between February 2022 and October 2024, shows the split between floating rate loans and fixed rate loans in Russia. And we've got two different scales on this chart. On the left-hand side, we've got the amount of debt shown in trillions of rubles, and that goes from 0 at the bottom to 48 trillion at the top. And the reason that it only goes to 48 trillion, despite the fact that the total volume of debt is now sitting at around 75 trillion, is because the bar charts have been split between floating rate loans and fixed rate loans. The fixed rate loans on this chart are shown by the grey bars, and the floating rate loans are shown by the pink bars. And on the right-hand side, we've got a percentage scale going from 0 to 100%. And the two line charts are showing that scale. The blue line chart, which is the one at the top, records the percentage of loans with a floating interest rate. And the red line shows those loans that are linked to the Russian base rate. So basically where a company may pay something like 5% above the official base rate. So if base rate is at 21% and they're paying 5% above, then they would be paying 26%. And what this chart shows is that in February 2022, the percentage of business loans with a floating rate was 39.8%. So that means that the majority of loans, 60.2%, were fixed rate loans. And you can see that clearly because the grey bar here, which shows the fixed rate loans, is much bigger than the pink bar, which shows the floating rate loans. However, if you look at what's happened over the past 2.5 years since the war in Ukraine started, you can see that the total volume of fixed rate loans has increased over that period, from around 26 to 35 trillion rubles. However, the growth in floating rate loans has been much more rapid. And in April 2024, floating rate loans actually overtook fixed rate loans in terms of total volume. And over the past 6 months, the growth in floating rate loans has accelerated. And you can see from the figures for October that floating rate loans now account for the majority of the market. They equate to around 54%. So you might be sitting there thinking, well, why are companies in Russia actually taking out floating rate loans at a time when interest rates are rising so rapidly? Well, I think there are two reasons for that. Firstly, the banks in Russia have pulled back on the amount of fixed rate loans that they're offering because they don't want to offer a fixed rate loan and then see base rate going up rapidly, because those loans could quickly then go out of the money from the bank's point of view. They might be actually lending at a lower rate than they can borrow in the Russian economy. So over the last 2.5 years, we've seen a reduction in the amount of loans being offered by Russian banks. But also from the borrower's point of view, if you do take out a fixed rate loan, it's likely that that fixed rate is going to be considerably higher than the current base rate. So currently you might be offered a fixed rate loan of 30%, whereas you might be able to take a loan that only pays 25% on a floating rate, because nobody really knows what's going to happen to interest rates. They could continue going up if inflation doesn't come back down. So I think there's two factors as to why there's been such a rapid increase in the amount of floating rate loans versus fixed loans over the last 2.5 years. But this is clearly a problem from the Russian borrower's point of view because of what's happened with interest rates. This chart shows the movement in the official rate of interest in Russia over the past 3 years, and the period that I really want to focus in on here is what's been happening since the summer of 23. Between September 2022 and July 2023, the official rate of interest was 7.5%, which in itself is still an extremely high rate. That's higher than the current rate of interest in most developed economies around the world right now. So even then, the cost of borrowing was high in Russia. But as you can see, over the past 15 months, there have been 8 consecutive interest rate increases to the current level of 21%. And what that means for all of those borrowers who are on a floating rate is that the cost that they're paying has gone up dramatically. If we take an example of a borrower that took out a 10 million ruble loan, and that sounds like a lot, but when you consider that the current exchange rate is around $1 to 98 rubles. That equates to around about $100,000. So I'll talk about it in dollar terms because it's easier to refer to. So the company has a loan of $100,000. So 17 months ago, when the base rate was 7.5%, if we assume that that borrower was being charged a margin, so basically the profit that the bank was taking over and above the base rate of 2.5%, that company would have been paying 10% interest. So on a $100,000 loan, they would have been paying $10,000 per year. So that's obviously the amount that they'd have to put into their budget and account for it on a monthly basis. If we now look at that same loan, if it's on a floating rate, the base rate has increased from 7.5% to 21%. So if you add on top the 2.5% margin, that company is now paying a total rate of 23.5%. So the rate has more than doubled over the course of the past 17 months. And on that $100,000 loan, the interest that company is being charged every single year has now increased to $23,500 compared to $10,000 before the base rate increases struck. And what that means for a lot of companies and entrepreneurs is that they will now be paying all of their profit to the bank in interest charges. So this will have wiped out a huge amount of profit for all of these companies, and many of them have now moved into a loss-making situation. Now, obviously, that calculation only takes account of what's going on with interest rates. But if we look at what's going on with wages, which is another really big cost for Russian companies, over the past 18 months, the Russian economy has converted itself into a wartime economy. So lots of companies are now being sponsored by the Kremlin to produce things for the war in Ukraine. And what that's done is drive up wages across the board because those companies are looking to hire as many people as they can to produce as many things and therefore get paid guaranteed revenue from the state. That's driving up wages for all of the other companies, and that's causing them a problem because it means that their costs are going up. So they've had an increase in debt costs, and now they're seeing an increase in wage costs. This chart shows the year-on-year movement in real wages in Russia, and the reason that I'm showing you real wages is it's the only data that we get out of Russia. We don't get actual wage growth. And what we need to do with this data is add on top inflation, because real wage growth actually looks at how much your wages are growing over and above inflation. And one thing to note about this chart is that the scale on the right hand side does not start at 0, it starts at 5% and goes up to 14%. And what you can see from this data is that real wages have increased in every single one of the last 12 months by more than 6%. And the latest data, which has been published for September 24, show that real wages increased by 8.4%, which when you add on top the inflation of 8.6% seen in September 24, that means that in total, wages have risen by 17%. And obviously that's putting even more pressure on Russian companies. So the increase in debt costs and wages is obviously bad news for Russian companies. But a further factor is what's been happening with the Russian ruble. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the past 5 years. And if we zoom in and have a look at what was happening 17 months ago, before the interest rate rises started to kick in, one US dollar at that time was trading for around 85 Russian rubles. However, today it's trading for 106, and if you've been following the channel, you'll know that it actually got to around 115 against the US dollar recently. However, Russia has now closed down the ruble trading, so the 106 level is a very narrow market. And what this means is that over the course of the past 18 months, the value of the ruble has fallen by almost 25%. And that represents a serious problem for companies in Russia because everything that they're importing, whether it's finished goods or raw materials, is now significantly more expensive and is putting further pressure onto these companies because it's cutting their profit margins and making it more difficult to be able to cope with any debt. So let's take a look at what all of this means for bad debts in Russia. This chart, which has also been produced by the Bank of Russia, shows the total volume of debt in arrears held by Russian businesses and entrepreneurs. And this is over the same period between February 2022 and October 2024, so basically the length of the Ukraine war. And the scale on the left-hand side of this chart shows the total number of borrowers and goes from 0 at the bottom to 750,000 borrowers at the top, and is looking at the grey bar charts. And the scale on the right-hand side is a percentage and goes from 0 at the bottom to 20%, and the blue line chart is using that scale. So we start off by looking at the situation in February 2022. At that time, there were 465,176 borrowers in arrears, which represented 13.1% of all of the corporate debt. However, as you can see, over the last 2.5 years, there has been a steady increase in the total number of borrowers and also the percentage of debt in arrears. And the figures for October 2024 show that there are now 693,512 borrowers in arrears, which represents 18.2% of the total debt outstanding, so almost 20%. And over the past 2.5 years, the number of borrowers in arrears has increased by 228,336, which represents a 49% increase, which is absolutely huge. And if we apply these statistics to the total volume of debt, it means that in February 2022, around 5.6 trillion rubles worth of debt was in arrears. However, the figure today is above 13 trillion rubles. And that's an increase of almost 2.5 times over the last 2.5 years. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with Russian corporate borrowers and their outstanding debt is really quite fascinating and also very concerning from Russia's point of view, because corporates are the heartbeat of any economy. And what we're seeing is that over the past 17 months, the 8 consecutive increases in interest rates from 7.5% to 21% is now becoming unmanageable for a lot of these companies. We've seen an increase in debt over the past 2.5 years. Lots of Russian companies have felt the need that to borrow money, they've had to take money from Russian banks either to survive or to try to grow. They haven't had enough cash flow because of what's been happening with the sanctions, which has restricted the amount of trade that they've been able to do internationally, and also has led to a reduction in the value of the ruble. So the purchasing power of their rubles has been diminishing over the past 2.5 years. So those companies have had to reach out and take on debt. But the problem with debt is that you have to repay it and you have to pay interest on it. And the fact that interest rates have gone up so rapidly over the past 17 months means that we've seen interest costs more than doubling over that same period. And for a lot of borrowers, you simply can't afford to do that. If you think about this in your own context, if you take out a mortgage, you work out how much that mortgage is going to cost you every single month, and then you can budget for that. Now, if your mortgage cost suddenly doubled overnight, then clearly that would put you in a different financial situation. And for a lot of people, you simply wouldn't be able to pay it. You'd have to forfeit on your house, you'd have to give it back to the bank and find somewhere else to live. And that's the problem that a lot of these Russian companies are now facing, because when they were taking out a lot of these loans over the last 2.5 years, interest rates were actually going down in Russia, because immediately following the invasion of Ukraine, the Russian central bank increased interest rates to 20%, but they then rapidly reduced them down to 7.5%, and it stayed at 7.5% for a long period of time. So Russian companies were probably thinking, well, we've got through the worst of it, we've had the emergency interest rate immediately following the start of the special military operation, as it's called in Russia, and now we can start budgeting around the fact that rates will stay at or around 7.5%. But clearly, they've almost trebled over the past 17 months, and that's going to cause chaos for a lot of these companies. And as we saw from the data, we've now got a massive increase in the number of companies that are in arrears, and the total volume of debt that's in arrears has increased from 13% to 18%. And it's highly likely that the number of companies in arrears is going to increase, because the interest rate increases have only really started kicking in the past 6 months. We've seen some rapid increases. And so it won't have fed through yet. It might be that these companies can afford the increase in interest costs for 1 or 2 or 3 months. But when it becomes 6 months or 9 months or 12 months, that's when you get to breaking point. And as we also talked about, the other problem that Russian companies have is that costs have also been going up. Wages have increased rapidly in Russia over the past 12 to 18 months, double-digit increases. And because the value of the ruble has continued to fall, their purchasing power is going down. So any Russian companies that need to import things are now finding that those things are costing them more. So we've got a perfect storm here for a lot of Russian businesses. Their costs are going up in terms of their debt costs, their wage costs, and their raw material costs. And what that means is that their profits will be going down significantly. And a lot of Russian businesses are now facing the fact that they don't have enough cash and they might not be able to survive. And there is a high probability that we will see a rapid increase in the volume of bankruptcies in Russia. The companies that are being sponsored by the Kremlin will be fine because they're protected. They've got guaranteed revenue. They know that they're going to make a guaranteed profit. But for all of the other companies in the economy, this is now a critical period. They are struggling to be able to pay all of their costs. Those costs are continuing to rise because the Bank of Russia is focused on trying to bring down inflation. But the casualty of that process is that all these Russian businesses are now struggling in terms of a rapid increase in costs. So hopefully you found today's video useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.